Catching the Trade here on AusBiz. Let's get you caught up on what traders are watching out there, and we should reiterate that Australia's unemployment rate is at 4.1% seasonally adjusted. Full-time employment rising in January by 54,000. January employment up by 44,000 versus estimates of 20,000. Overseas, we've also seen some concerns about the potential impact of Trump policies, stirring inflation concerns at the Fed when you look at the minutes, and Trump announcing that he will have a range of tariffs over the next month or sooner. Japan's trade minister will also visit the US in March for tariff talks, and we saw the dollar and yen rise as a lot of the risk appetite faded on the tariff rhetoric. Oil prices holding near a 1 week high on supply concerns. Let's get more across the technicals with Nick Twidale from ATFX, who joins me now in studio, and having a look at the Aussie dollar here. A little bit choppy after that employment data.
Yeah, I suppose not surprising. Those numbers sort of twice what we were expecting. 44 expecting about 20,000, and interesting that we were saying in the break that the full-time numbers are a lot higher as well. So I think that's probably pretty positive for the economy, for the Aussie, but probably not so much for future rate cuts coming from the RBA after this week.
Yeah, absolutely, and let's discuss that, because they seemed very cautious about further rate cuts there. How is that all going to play through into the currency market when you've got this tight labour market and they sort of think that one interest rate cut is going to be enough to keep inflation where they want it? Yeah,
I think it's very supportive for the Aussie. So as we can see from the chart, the Aussie's not failed to make any headwind to the downside for a while now. I think we'll probably, obviously with the Aussie dollar itself, we're going to be looking at that dollar side of the equation. That's probably going to be more volatile. But I think on the crosses, you're probably going to be looking to buy Aussie now, because relative to most of the other central banks that are looking to cut, the RBA has remained hawkish for all of 2024, and now even when they're cutting, it's very unusual to have a hawkish cut, and we did. So I think it's really supportive for the Aussie. So I think we're probably going to be looking for a break of those resistance levels on the hourly, and it moves us back into the middle of the range in the dailies, to be honest with you.
So back closer to 65 rather than towards 60.
It does feel that way at the moment, yeah. All
right, let's get into the cable. We saw British inflation surging to a 10-month high of 3% in January. What's that doing for sterling?
We got a nice knee-jerk reaction to the top side in cable. It's not so well described on that as a daily chart, but it did move up. It settled again afterwards as well. But I mean, once again, it's been the concern from the Bank of England and the MPC that the inflation has been sticky, particularly with wages, and it's kind of staying there, isn't it? So I think once again, it's another currency that's probably to be favoured on the crosses, depending on your view on the dollar. But we could see sterling break some of these key levels as well, and I think a lot of the majors are lining up for some big moves in the next couple of months. They're sitting at sort of interesting levels, and we've had a bit of a break in the last few weeks, and I think we could see them break one way or the other.
We focus a lot here on the potential trade war between the US and China, but US and Europe really potentially heating up, and you saw a lot of those tariff-related stocks fall in Europe. What are we seeing with the euro?
I think that's the other. I've just talked the Aussie up and the sterling up, and I think euro's the other way around. So I think you'd probably look at both of those currencies on the crosses, but here in the single currency, I think we're hitting good levels that single currency traders will look to come in and sell and use those resistance levels. So you've got a close resistance level that could go if the dollar gets hit. But I think that 200-day moving average up at 107.28 for longer term traders would be really appealing for anyone looking to sell. And then we could see it retreat down to those lows that we saw earlier in the year.
And the yen, is that looking more like a safe haven play then?
It is a bit, isn't it? Yeah, it's very interesting how the markets are moving. Gold's at all-time highs again. Yen's been sort of relatively unresilient in this instance, but I think we're starting to see those flows come through, that people are buying yen again as a haven product. So I think we could see some downside moves in dollar yen. We're sitting near sort of lows there, and on that daily chart, we get breaks to that downside, and it does open the way for a big move lower, sort of into the mid 140s.
All right, let's get back to our dollar and just sort of more of the knee-jerk reaction we saw after that employment data, because I wouldn't mind you going through it with me a little bit more again. So January employment, as we mentioned, up 44,000, so pretty much double what we're expecting. And as we mentioned, a lot of that coming from full-time. So that's a flip from December, when it was a lot more seasonal, Christmas and whatnot. I mean, as you mentioned, a really good sign here for the economy.
Yeah, it's really good, isn't it? It's, apart from if you're an Aussie bear.
Yeah.
I think, traders traders would have reacted initially to that 44 number. That's taken it higher. And then sometimes, like last time, we look and go, oh, it's seasonally adjusted and it's the part-time number. But this is full-time, so I think it's really positive for the economy. And as I said, it probably justifies the RBA sitting there giving themselves a few high fives, going, well, you know, this is why we've remained hawkish, because we have to keep an eye on these numbers.
Yeah, absolutely. All right, Nick, thank you as always.
Thank you.
Nick Twidale from ATFX. That does it for this edition of The Trade. Be sure to join us next time.